Hello, everyone. This is Mohammed Akif with Akif CPA. I am a Texas CPA. I'm also a chartered accountant in Ontario. And today we'll be discussing what is the equivalent on the American side of a RSP account, and also comparing those accounts with the RSP in terms of the tax deduction and contribution limits, carry forward options, or withdrawal options, and then retirement withdrawal options. What do you have? So, without any further delay, let's get into it. So first we'll talk about the equivalency, meaning that we know what is RSP, how that works, and then what is similar on the US side. So RSP, of course, this is a retirement account for Canadian tax purposes. This is all pre-tax. All the contributions you make are pre-tax. So any growth when you do any growth in that account is also is also pre-tax. At the time of withdrawal, you pay taxes. This is a summarization of how the retirement RSP retirement accounts are working. On the US side, in terms of equivalency, we have IRA and IRA account, also a solo 401k account, and then group 401ks, which are funded by through your employer. So these the for IRA, the 401ks are also similar in a way where you can have contributions, pre-tax contributions, meaning that this is money that you haven't paid tax on. Pre-tax contributions, the growth in them is also pre-tax. You pay taxes when you withdraw the amounts from those accounts. So the equivalency is RSP, or the group RSP on the Canadian side, similar to being having equivalency on the US side or American side of IRA, 401k, solo 401k, or the group 401k through your employer. So now let's talk about, and we'll be comparing the RSP account versus the IRA account or the 401k account, so you can see in terms of what are the contribution limits, if you have any carry forward options available, if you have any early withdrawal penalties, and then also what are the minimum required, what is the age in terms of the distribution amounts that you need. So let's get started. So the RSPs are, of course, this is RSP contribution amounts are based on the earnings that you have on the previous year. There's a room that's being calculated by the IRS. You will have it on your notice of assessment. It tells you how much contribution limit you have from previous year combined with the all the other years. So in terms of the RSP, the contribution amounts, these are from year to year based on your earnings, and the contribution limits do carry forward. That's one big difference between the IRA 401k accounts versus the RSP contribution, because the RSP contribution rolls over from one year to another. And then any contribution that you don't make, the rooms that you don't use, that is unused amount, do get carried forward. So in a year you could be making 10,000 in contribution, the other year could be making 50,000 if you have room. That's one big difference, where the IRA does have a limitation in terms of every year how much you can contribute. Second limitation is also based on your income. The income amount does carry changes between the single and married filing separately, or to married filing jointly. So we have contribution limits, and also the income limits to make contribution to those accounts. Versus 401k, 401ks are, majority of them are run by the employer. So if you're getting earning from the W2 wages, you will have a bigger contribution room versus the IRA, where the contribution rooms can go up to into $10,000 to $20,000, even more, depending upon your wages. And also the company can also contribute to those accounts. So that's one big difference. Of course, any contribution that you make in there are all tax deductible. So these are all pre-tax money, the money that has not been taxed yet. So this will lower your taxable income down. So these are all pre-tax contributions. Again, the RSP contributions are from year to year. Any amount that is unused does get carried forward. So you can have a big room. And let's say if you worked there for many years and you moved to US, you will have a big room in the RSP account, which is unused, versus the IRA or 401k, where we do have limitation in terms of what can you contribute, and then in terms of your income too. That's number one. So and then of course number two is these are all deductible. And number three is that we do have the full carry forward options on the Canadian side and none on the US side. Unless in case of withdrawal, we do have withdrawal. So if we do have early withdrawal penalty on the US side. So if you do withdraw money from your IRA or 401k before 59 and a half, we have a 10% penalty on top of the federal taxes or the state taxes that you will pay. On the Canadian side, that's not the case, where you we will just pay our regular ordinary income tax based on the withdrawal amount that we do take. So there's an early withdrawal penalty on the US side for money that you withdraw. If you are 59 and a half or below, there's 10% penalty plus the federal taxes. On the Canadian side, that is not the case. Uh, so these are all the differences and equivalency between RSP, IRA, and 401k. So the equivalency is for on the RSP on the Canadian side with 401k or the IRA on the US side. Of course, the biggest difference is the annual contribution limits, which gets carried forward on the Canadian side, and then US side is not the case. Every year is a set amount that you can maximize. There's no rollovers. We do have early withdrawal penalties on the US side and none on the Canadian side. As a non-resident of Canada, when you do withdraw money from your RSP, if it's a lump sum withdrawal, there's a 25% withholding. If you don't, if you do RRIF, there's a 15% withholding.